over the last year or so because there's been some really interesting moves on the bucket list of stocks. Let's quickly run through, first of all, what's happening here in the UK. Got four stocks here. Bearing in mind, we've got companies that at the beginning of the year didn't know anything about the rise in gas prices. So you've got some really big responses here coming through. Serica, IOG amongst them. Jersey Oil and Gas is on the list. You can see up 16%, but Union Jack Oil was down 47%. We'll get up to speed with some more detail on these in just a minute with Malky. Let's take a look at what's happening on the international scene. Now, there's 8 stocks here in total. These are 4 of them. You can see that Touchstone was down 5%, but we saw a 200% rise for Petrotel Corporation. A quick update on the second list for international stocks. They got some nice healthy gains here as well for Predator and President, where Sirocco was on the way down. Chariot was also a bit of an underperformer. Let's take a look at some of the yield stocks as well. When you're looking at small cap stocks, you don't often get yields, but there's been some interesting companies to watch out for there with dividends on the added to the return. There are 3.6% for Diversified Energy. Wentworth Resources, the outperformer there in that list, up 36%. And finally, taking a look at the high beta stocks, because these are the stocks where we've seen some really interesting big moves. Kistos. Just recently, of course, this is a stock that's come into the public eye because it was called something different a short while ago. Zephyr Energy up 900%, but at the same time, you've got some of those stocks that have underperformed by a substantial margin as well, like BPC Challenger Energy. Well, let's catch up now with Malky and take a look in some more detail about some more of what's been happening over the last year. Malky, it's good to catch up with you as we end out 2021 into 2022. I know we're looking at these stocks on a sort of reflective look back, but I also wanted to get your idea as to how things are setting themselves up for 2022. First of all, I want your thoughts on the oil price and the gas price, because clearly this has had a big impact.
Well, we were right on the oil price and the gas price last year, but not as right as we might have been on gas. As you can see, 2 of the top 5 performers, Serica and IOG, are both beneficiaries of the gas price, which has gone up from 50p a therm to 350p a therm. We've been talking about little else, but the oil price has been pretty firm. It got up to about 75, nearly $80 for Brent, and it's come back off a bit. I'm a short to medium term bull on the oil price still, not necessarily of the $100 people, but with maybe a sort of softish quarter still to come with COVID still around, but OPEC plus still ruling the roost. So, with oil prices, I think, to remain high, the oil sector is definitely a place to be.
Yeah, let's take a look at some of these stocks on the move, because I think it's fair to say that, as you've rightly indicated, that with the change in the gas price, there's been some interesting moves here, but we weren't expecting, 900% for Zephyr. Kistos as well. Update us on what's been going on there, because it's been a big change. Of course, Kistos is relatively new.
Yeah, well, I mean, we've never had a 10-bagger in all the years you've been following this as well. I think we had a 750 once. So this is nearly 10 times the price for Zephyr that it was this time last year. I just got a really good vibe about this company's management. They'd taken over a place called the Paradox Basin in Utah, where it had been drilled before. They managed to drill it again successfully. But the management do all the right things. Not only have they obviously drilled this particular basin successfully, but they're very good at doing other things to make the company impressive on its own right. For example, they've been buying production mainly in the Williston Basin, which gives them just straightforward production, which pays for the running of the exploration side, which is what all oil companies like to do, but very rarely get it together. So Rick Grant and Colin Harrington, who's the CEO, have done a fantastic job here. And, you don't often see something which is up 9 times, and then you say, I could easily expect 5 times for next year. It'll be somewhere close to the top of the one for next year. And you mentioned Kistos. Kistos is all down to one man, which is Andrew Austin. You will remember in previous lists we had a company called Rock Rose. That was his previous venture to this. Exactly the same thing. Buy identifiable, cheap production assets, bring them into development, and the Rock Rose was sold. It was bid for and went out at a huge premium in the summer of the year before last, in 2019. And Kistos got into the list by one day. Andrew started again. He raised a bit more money from scratch. Kistos was nothing in Kistos when I selected it. This time last year, 130p odd was the listing price. It's tripled, as you can see, since then, and that's because he's already bought some decent assets, and he's always rumored to be buying some more. At the moment, he is rumored to be buying some assets from Total. So those two are, and you can see in the rest of the high beta stocks why they're high beta stocks, because you got first and second, and then 15, 16, and 19. All good reasons, but they're in there for a reason. We give people a chance to play the high beta, and BPC Challenger, you can see there, that was better known as Bahamas Petroleum when they drilled a big high risk, high return chance, which didn't come in. So understand why it was such a poor performer.
Let me just direct you towards this gas story, if I can, and drill a little bit further on down, if you get the pun, for Serica and IOG, and your expectations as to where the gas price is going to go, because clearly this is dependent on what's happening with natural gas prices. Do you see the sort of gains we've had, the 200% gains we've had for both Serica and IOG, continuing into 2022, or have we seen the top? This is the problem, isn't it, about trading? When you hear traders, they say, "Oh yeah, it's gone up. I'm going to sell out now." Quite often, there's no real reason fundamentally for people to sell out. Just because the stock has gone up doesn't necessarily mean to say there won't be more added value next year. So, trying to persuade the trader that there is more to come. Tell me what the arguments are for both these companies.
Well, these are both companies which are pure gas. Well, Serica is 80% gas, IOG 100% gas, and IOG is bringing on its big field in the southern North Sea gas basin in the beginning of next year. So only weeks to go there. And they were doing their numbers on 45p a therm, and today it's 385p a therm. Has been higher. I wouldn't expect everything to stay at 385p a therm, but if it's anything more than 45p, they're having a result. But I would expect it's going to stay high. And Serica are riding high because they're probably one of the best managements in the whole sector with Mitch Fleck, and his team are fantastic. And they've brought on new gas plays during the year, and at the end of this year, they take control of all the assets they bought from a consortium in the North Sea some years ago. And so they'll be in a very strong position there. No, I think that, even if the gas price was to come quite a long way down, they'd still be making a lot of money. And I think that, we've got another thing here where gas is politicized at the moment. You've heard people talking about Russia. Well, the bottom line is that Russia control the price of our gas, whether we like it or not. We can buy gas from other places, and we buy gas from the States, in terms of LNG. We buy gas from Norway, and we can buy gas from Oman and Qatar. But the bottom line is that we are going to be paying high prices for our gas for a while. So anyone in there with a bit of gas in it is going to do very well.
Let me stay on the UK chart. UK Union Jack Oil has underperformed on the 4 stocks you've got in the UK. Is that one that's likely to make the cut into next year? Are you hopeful that things could pick up, or is this one of those that you think perhaps maybe you've done with on the bucket list now?
No, I think that that absolutely no doubt that Union Jack will be in the portfolio for next year. I think it's worth way more than the 28p here. There's a lot of control of this stock by the retail sector and people in there who and it's onshore UK, so some people are concerned on the politics front there. But actually, with with Wrestle, where this is a field in the UK where it's producing already way more very, very profitable barrels than they expected, and of course they've got West Newton and 2 or 3 other fields as well. This is one where the market just hasn't got to grips with just how valuable this company is.
Let's move on to yield plays within the small cap space, because we don't often see many paying dividends. But I think the point you make is well made, is that dividends seem now to be a really good way for these small cap companies to pay back shareholders. First of all, why are they using the dividend route?
Well, I tell you what, it's a thing of the future as well, because we're going to see more of it. In the old days, you were never able to finance an exploration program through debt. You always had to do it through equity, and when that happened, you got a situation where you raised money in the marketplace through equity, and therefore people who did that didn't expect it to be paid back the next year, when it's an extraordinarily inefficient way technically of doing it. But now these companies have raised money and they do very well, and at $75 a barrel, you can imagine what the free cash flow of some of these businesses is, and it's throwing off money, and they're able to pay a dividend, and they will be doing so. But interestingly, if you look at the stocks that I've identified here, they're all overseas stocks. So Diversified is making its money in the US, where it continues to make acquisitions, and I mean it pays a yield of 11 or 12%. So the reason for my putting it in there was total return, because it'll pay a very decent yield. It paid 11.5p of dividend last year, and Ganel, which, as you know, is Kurdistan. A huge cash flow comes off that business. Wentworth Resources have done very well in Africa, and are paying, for the size of the business, a substantial dividend.
Just a couple of stocks suspended on these lists. Are we going to see them return to the market?
Yeah, and we'll see Savannah anytime now. They are completing 2 very substantial acquisitions in Africa, in Chad, and they are taking out Petronas and ExxonMobil out of their operations there, and that's huge. For Andrew Knott, the CEO of Savannah, is very confident he's going to make do very well here. And looking at what they've got, I think that their shares will come back way, way higher than what they were suspended at, and it's going to be a huge business, Savannah, for years to come in Africa, and a place where demand is huge. And so we're expecting any time now. It might have been out today. The document, the AIM admission document, because it's a reverse takeover, and the shares to be back in the market anytime soon. So we could find that will slot in, anywhere, but it's very much towards the top end of the range, I would expect. Sandleon, they operate in Nigeria. They've got a very interesting model, which most people haven't really worked out yet. But they basically find companies that are operating in Nigeria that need to borrow money, and most of the companies operating in Nigeria need to borrow money. They lend them money at very high rates, and they take a stake in the company as well. So they might lend them $10 million at 15 or 20%, and they take a 15% stake in the company. And then the oil comes on stream, and they get a huge payout. And Sandleon will pay out, probably 30% of their of the payments they get. It'll be lumpy because 2 years ago they paid out a massive amount of money. They're suspended because these deals take, as with the Savannah deal, who are also in Nigeria, because they just take a very long time to come to fruition. But when Sandleon comes back, I'd expect it to be way higher as well.
Malky, just one final question. We've not long seen the completion of the COP26 climate conference back in November. What did you take away from that? Because clearly we're talking about a sector here which is under a lot of pressure from social media, particularly in looking at ways to trying to find a better way for us all to get around the world, to heat our homes, and to engage more with renewables. I know a lot of oil companies are looking at ways in which they can become less environmentally damaging. We're looking at ways of trying to engage with renewables for power, for example. I know for a lot of these, the oil fields and for mining companies as well, particularly, which we're not talking about. But is there anything that you took away from COP26 which gives you some hope necessarily for small cap oil companies, particularly? We know that some of the large businesses like Total are shedding some of their assets, and small caps are picking these small projects up at some profit. What do you see for us that are interested in small cap oil coming out of this sort of new era for the way we integrate and adapt to new ways of getting around?
Well, I don't think I've ever been quite so excited about the opportunities for the oil and gas sector as when you see COP26 completing in Glasgow. And the reasons for that are fairly straightforward. First of all, pretty much all of these companies are working on getting to the lowest carbon in operating of their fields. I can pick out 2 or 3 there, but clearly Kestos, Andrew Austin is working on trying to be as virtually nil carbon. Jersey Oil and Gas, who are developing the Greater Buchan area, are doing that, and they're looking at everything from electrification and just basically all these companies will be low, very, very low carbon in terms of producing oil and gas. And take someone like Chariot, where, as you said before, the shares have been low this year, but that's because they're putting huge amount of investment down. First of all, they're developing Morocco, but across the whole of Africa, they're working with Total, part of Total, in terms of making possible getting a much more efficient power into mines, not just oil and gas, but mining as well. So what we're finding here is that there is going to be, people forget there will be demand for oil and gas, fossil fuel, whatever you like to call it, for years to come. And, I think the people I speak to in OPEC have never been so confident about the fact that, forget 2030, it could be longer, almost certainly will be, because, yes, we're cutting the amount of gasoline we use, but the average age of a car in the States is still about 17 years old, and electric cars aren't going to be obvious in Africa for years to come, and so on. So, it's going to take an awful long time to wean the world off fossil fuels, and therefore, so long as you force Shell into stopping production or development of one field, all you're doing is making sure that they cut capex, and when you cut capex, in a few years' time, there's less of the product, therefore the price goes up. So oil prices set fair, and it's not going to change for the time being, whatever happens.
Okay, look, Malky, thanks indeed for joining us. We'll catch up with you sometime in the new year with your 2022 bucket list. But in the meantime, have a great holiday over the holiday season, and we look forward to speaking to you again. That's Malcolm Graham-Wood from malkysblog.com, updating us on the performance of last year's bucket list. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.